For decades, fixed deposits were considered the safest and most reliable investment option in India. Families trusted banks with their money, earning a guaranteed return with almost zero risk. But times are changing, and millennials are at the forefront of this shift. Today, more and more young investors are moving away from FDs and embracing stocks, mutual funds, and even ETFs. The biggest reason behind this shift is returns. Fixed deposits today offer between 6 to 7% interest. But after adjusting for inflation and taxes, the real return often falls below 3%. Millennials understand that simply parking money in FDs is not enough to build wealth. On the other hand, Indian equities have delivered an average of 12 to 15% annual returns over the long term, making them a far superior wealth creation tool. Accessibility has also played a key role. Unlike earlier generations, millennials have access to online trading apps, zero brokerage platforms, and financial education on social media. Buying shares of a company is now as easy as ordering food on an app. This ease of access has removed the fear and complexity once associated with stock markets. Another factor is changing financial goals. Unlike their parents, millennials are not satisfied with just safety. They aspire to retire early, travel more, and achieve financial independence. These goals require higher returns, and equities offer the best path to compounding wealth over the long term. Of course, this doesn't mean millennials completely ignore safety. Many are balancing their portfolios with a mix of equity mutual funds, SIPs, and small allocations in FDs for emergencies. But the preference is clear. Risk-adjusted returns from equities are winning over guaranteed but low-yielding deposits. The trend also highlights a larger shift in mindset. Millennials are no longer satisfied with just saving money. They want their money to work for them. That's why the move from FDs to stocks is not just a financial decision, but also a cultural one, reflecting the new India's confidence in markets and its own future growth story.